So if you've been glancing at the global headlines lately, you've probably seen something pretty remarkable happening with silver.
Mhm.
It's surged. We're talking levels unseen in over a decade this year. And it seems like it's doing more than just, making investors happy. It
Right.
feels like it's acting as this powerful, kind of revealing indicator for some much deeper trends in the global economy.
Yeah, it's definitely more than just the metal itself.
Exactly. So our mission in this deep dive is really to unpack what we're calling the silver spike. We want to explore what's truly behind its, well, dramatic ascent
Okay.
and why it continues to face these persistent supply shortages, and also what its intense volatility tells us about some profound stress signals simmering beneath the surface of the world economy.
And the insights we're drawing on today, they come from an expert analysis. It's titled Silver Spike Exposes Supply Squeeze, Economic Cracks. It's by Doug Young, published by the Gold IRA Company's Bulletin. And that's an independent educational platform specializing in business research and market analysis within the precious metal sectors.
Good stuff. So our goal here is to give you a clear shortcut, really, to being well-informed about this critical market.
Mm.
We'll share some surprising facts, provide clear explanations, and hopefully help you understand silver's pivotal, often overlooked, role in our global financial and industrial landscape.
Yeah, it touches a lot more than people realize.
Okay, let's dive right into this then. We're seeing silver surge to over a decade high. It's dominating headlines.
It really is.
And it seems like both industrial and investment demand have just escalated throughout the past months. This isn't just a minor blip on the radar, is it?
No, no.
It feels like something more fundamental is happening here.
You're right. What's fascinating here is that this is absolutely not a one-off event. Not at all.
Oh.
The global silver market is actually facing its fifth straight year of deficit.
5 years. Wow.
5 consecutive years where demand has consistently outstripped supply. So this rally, it's not just about market speculation.
Right.
It's truly emblematic of much deeper stress signals in the world economy. It reflects, systemic vulnerabilities that are becoming increasingly evident.
It really feels like there's a multifaceted story unfolding. From your perspective, what are the primary forces really driving this silver surge right now?
Well, there are really two main, very powerful forces at play here.
Okay.
On one side, you've got record-breaking industrial demand, just huge.
Mm-hmm.
And on the other, significant monetary and investment demand. And both are converging to create this intense upward pressure on prices.
Let's talk about that industrial demand first. I've heard the solar energy boom is a primary driver here.
Absolutely.
And what's surprising is that modern solar panels actually require more silver per unit than the older ones.
That's right. It's kind of counterintuitive, but advances in efficiency standards and just the massive expansion of green energy adoption worldwide mean they need more silver.
It's really remarkable how a metal we might just think of as, jewelry or coins is so deeply embedded in our green future, isn't it?
It really underscores its quiet but essential role. And, it goes far beyond just solar. Silver is absolutely critical across so many other sectors. We're talking electronics, the automotive industry,
Right.
and is particularly vital in the push for artificial intelligence and electric vehicle innovation.
Makes sense.
Current estimates show that industrial uses alone are consuming more than half of all silver produced this year.
More than half.
Yeah, actually surpassing 700 million ounces. That's just a staggering industrial appetite. It really demonstrates how central silver is to modern technological advancement.
Okay, so industrial demand is clearly a massive driver, but what about the other side you mentioned, the investment side?
Right.
Are investors seeing this squeeze now looking at silver as maybe a safe harbor amidst all this economic volatility?
Exactly. That's precisely what's happening. We're seeing a significant channeling of funds into silver-backed exchange-traded funds, ETFs, and also a strong demand for physical silver products, things like coins and bars.
And people are paying extra for those.
They are. What's particularly telling is that people are paying really significant premiums above the spot prices.
How significant.
Well, some reports show premiums exceeding 20%, even 30%.
Wow. That's high.
It's a powerful signal of acute physical scarcity. It really indicates a disconnect between, say, the paper market and the tangible demand for the actual metal.
Right.
And this surge in physical sales, it's a direct response to, well, inflationary concerns, policy uncertainty, even international tariff disputes. It clearly underlines silver's dual role,
Dual role,
and
meaning?
it acts as both a vital industrial component and a trusted store of value when confidence in other assets starts to waver.
And speaking of policy and tariffs,
Yeah.
how are those global policy decisions impacting silver supply specifically? It sounds like we're adding another layer of complexity here.
Oh, absolutely. This is a critical point.
Okay.
The recent imposition of 30% tariffs by the United States on significant imports from places like Mexico and the European Union,
Right. I remember reading about that.
that has directly disrupted established silver supply chains.
Mhm.
And when you consider that Mexico is the world's largest silver producer,
Their policies really matter then.
you carry an outsized influence.
Yeah.
Exactly. So these tariffs, they don't just add cost. They directly complicate logistics. They force companies to seek new, often less efficient suppliers.
Hmm.
And they can even stall production entirely while trade agreements get renegotiated. This introduces a massive layer of operational uncertainty.
Which must amplify the price swings.
Totally. It amplifies price volatility, and market participants are now kind of bracing for even further unpredictability, all driven by these global political tensions and evolving trade regimes.
Okay, so beyond the surge in demand, which is huge, is there a fundamental issue on the supply side that's also contributing to this spike? It feels like the world just can't dig up enough silver fast enough.
Yeah, that raises the really important question. Why can't supply keep pace?
Right.
And the answer is we're facing a persistent structural deficit in the silver market.
Structural deficit. Okay.
For this year, 2025, the forecast is for a deficit ranging between 117 and 149 million ounces.
That's a big gap.
It is. And this persistent shortfall, now stretching into its fifth consecutive year, like we said,
Yeah.
it highlights a systemic problem where demand just continues to outstrip the mining industry's capacity to deliver.
So mine output isn't growing much.
Well, it's expected to increase, but only modestly, maybe around 2% to 3% year over year.
Which isn't enough.
No, that growth simply fails to meet the surge in demand we've been talking about. And even with growing efforts, silver recycling also remains insufficient to bridge this widening gap.
You mentioned a systemic problem. What's actually going on at the production level itself? What makes it so hard for miners to keep up?
Well, global silver miners are grappling with several major headwinds right now.
Such as?
For one, they're seeing declining ore grades and resource depletion.
Meaning less silver in the rock they mine?
Exactly. So they have to dig deeper, process far more rock just to extract the same amount of silver. That drives up costs significantly and makes the whole extraction process more time-intensive.
Okay, makes sense.
Plus, major production hubs like Mexico and Peru, they're also facing additional regulatory burdens and rising operational expenses.
Right.
And on top of all that, there's a significant shift happening in global capital. Investment money is rotating towards minerals that support battery and clean energy tech.
Like lithium, cobalt.
Precisely.
Hmm.
Which means new silver exploration is actually struggling to attract the necessary funding it needs to keep pace with future demand.
So if new supply isn't keeping up, how has the industry been coping with this immediate demand? Are they just pulling from existing reserves?
That's largely been the case. To meet the immediate demand, the industry has increasingly tapped into existing above-ground stocks.
Less stockpiles.
Exactly. Stockpiles that have been accumulated over time, essentially acting as a buffer.
But that can't last forever.
No. And as these inventories continue to shrink, the risk of intensified price swings grows exponentially.
Which adds more uncertainty.
It compounds the uncertainty, not just for investors, but critically for manufacturers who rely on silver as a key input for their products. Relying on existing stockpiles is really just a temporary fix.
Right, it masks the deeper issue.
Exactly. It masks a deeper deficit, and its depletion means there's less of a buffer against any future shocks to the system.
It really sounds like silver is acting as this powerful barometer of global economic health, doesn't it? What's the bigger picture connection here?
Yeah, if we connect this to the bigger picture, that's absolutely true. You've got persistent inflation, slowing growth in major economies, the threat of recession.
While creating anxiety.
Right. And that has significantly heightened the appeal of tangible assets like silver and gold. Historically, silver tends to actually outperform gold during periods of financial market distress.
Interesting. Why is that?
Well, partly because of that dual role we talked about. It serves as both an essential industrial input and an alternative store of value.
Okay.
So this duality places the metal right at the heart of current discussions on economic resilience. It reveals both the strength of green tech demand and, at the same time, the anxieties of investors.
So what are the real-world consequences then? For specific industries that depend heavily on silver, how are these rising prices hitting them?
Well, the impact is particularly acute for industries right at the center of the clean energy transition,
Like solar again.
like solar manufacturers, exactly. They're facing significantly higher input costs, and that could potentially affect the affordability of solar panels and maybe even the overall pace of installations worldwide.
Okay, that's a big deal.
It is. And beyond that, electronics, automotive, data infrastructure manufacturers, they also have to contend with tight supply and these volatile input prices because silver remains, for now, an irreplaceable component in many of their high-tech applications.
Well, these aren't just abstract numbers on a chart.
No, they directly translate to higher production costs and potential delays for some really vital technologies.
And how do the broader geopolitical forces, the big players like the US and China, tie into all of this? How are they influencing the silver market?
Well, the trajectories of the U.S. and Chinese economies, they continue to exert really powerful effects on both silver usage and investment flows.
Right.
What we're seeing is that ongoing trade disputes, these shifting tariff policies, and global supply chain realignments.
All the stuff in the news?
Yeah, it's only served to make the market even more unstable. Fragile, really.
Yeah.
So policy watchers, industry leaders, they're constantly monitoring these developments for signals.
Signals of what might come next.
Exactly. Signals that could foreshadow continued price instability because economic policies can directly create resource volatility and really complicate international trade.
So looking ahead then, what are the projections? What are the uncertainties for the silver market from here? What should listeners maybe be watching for?
Well, price-wise, silver has consistently traded above that $34 to $39 per ounce range through mid-year,
Which is way up from before.
clearly outstripping year-ago averages and breaking through some key resistance levels. Now, while some analysts are predicting that prices could approach, say, $45 per ounce if these structural deficits persist,
That would be quite a jump.
it would. But others suggest that market participants should remain very alert to possible volatility as supply and demand forces continue to evolve. The market just remains highly volatile. It's driven by this complex interplay of policy, technology, and overall economic health.
And what are some of the key risks involved for anyone watching this market unfold, or maybe even participating?
Yeah, despite the currently bullish backdrop, there are significant uncertainties. Regulatory changes, for instance,
Like new environmental rules.
could be,
Yeah.
or technological advances that might maybe reduce the silver content needed in some applications. That could change demand.
Okay, thrifting.
Potentially. And of course, shifts in global macroeconomic conditions. They could all reshape the market in unexpected ways.
Like a big slowdown.
For example, yeah,
Hmm?
a slowdown in key demand centers, China, the US, the EU, that might temporarily relieve some of the supply pressures, sure.
But that wouldn't necessarily be good news overall.
No, because that would also introduce new challenges for the global economy by signaling a broader economic downturn. So it's complicated.
Definitely sounds like it.
So to sort of sum up, silver's dramatic ascent this year, it's clearly powered by these enduring supply constraints, very robust industrial use, and the intensification of global economic strains.
Right.
And with those inventories dwindling and key sectors facing critical input pressures, the ripple effects are being felt far beyond just the precious metals market itself.
Yeah, it's fascinating. This whole deep dive really reveals how a single commodity, like silver, really intertwines with everything from global green energy initiatives to high-tech manufacturing and even international trade policy.
It really does.
So maybe something for you, the listener, to consider. How does knowing that these irreplaceable materials, vital to our technological future, are directly impacted by macro trends like tariffs and inflation, how does that shift your perspective on, say, the underlying costs of the consumer goods you buy? Or maybe the complexities of national economic policies? This isn't just about a metal, is it?
Not at all.
It's really about the deep interconnectedness of global supply, demand, and policy. And it reveals, maybe, a hidden cost to both progress and protectionism. Lots to think about there.